everyone. Today I'm joined by Jim Alderson-Smith, a managing director at Crux and a Wharton MBA alum. Where are you dialing in from today, Jim?
I'm in Brooklyn, New York.
Also, is that where Crux is based?
So we're actually a remote first company. So we are based all over the place. We actually have 2 employees in Canada as well, but we've got folks in Los Angeles, we've got folks in San Francisco, we've got folks in New York, and then a few others dotted around the country.
Amazing. Well, I'm super excited for this episode. Crux has been a company that I've been following for a while, and I think it's really interesting, especially like everything that's happening right now in the climate tech world. So before we dive into some of the specifics, could you just describe at a super high level, like what is Crux, what is the product, and like who are your typical customers?
Yeah, for sure. So Crux itself, we are a capital markets technology company for clean energy. We launched in early 2023 with the mission really to kind of supercharge the clean economy by making capital markets more liquid, efficient, and intelligent. Our platform allows kind of clean energy developers and manufacturers to access liquidity in a wide range of debt products alongside the purchase and sale of transferable tax credits. We have a large network of investors, developers, manufacturers, and intermediaries who advise in financing deals. And we also put out kind of industry-leading market data reports.
It's super interesting. I think, me in particular, and I'm sure a lot of people in the audience, when we think of like capital markets, it always feels very like human based and not necessarily like super tech forward. So like excited to learn more about like how you guys are actually making like a tech platform for a traditionally very like conservative market. Before that though, like what is your background? I mentioned you went to Wharton, but what was your background before that? And like, how did you find yourself at Crux?
Yeah, sure. So yes, first and foremost, right, I'm a Wharton alum and I love my time there. Before Wharton, I spent the majority of my career actually developing clean energy projects, mostly solar, although later in my career, also energy storage. And I was working at a vertically integrated IPP. IPP is independent power producer. That means that essentially we were developing the projects, we were building the projects, we were financing the projects, and then we were owning and operating the projects. And kind of the most difficult piece of that whole stack often is the financing piece of it, specifically because clean energy projects in the United States are financed through, and historically have been financed through, a very bespoke and very unique source of financing called tax equity, which is typically, and we can get into tax equity if we want to, throughout this, but tax equity is typically something that is very complicated to put together, and it is also something that is not really available to everybody. And so while I was at Wharton, I was actually interning at a venture capital shop and met one of the founders of Crux, who had just come out of the Treasury Department and was thinking about building a marketplace essentially for a new type of asset class related to this tax equity. Those were transferable tax credits. And so because I had existed in kind of, a role where there had been this really difficult access to this type of financing that we needed to get clean energy projects done, and I saw this new way of kind of utilizing technology in this new transferable tax credit market to access that type of capital, I was really attracted to the solution, and I joined up as soon as I possibly could.
Amazing. In terms of, your customers, you mentioned like the types of maybe industries that they are, or, you have the people providing the debt, you have people sort of like accessing sort of like the financing, like what is it, independent power providers, like the people that you used to work for, who are maybe like the people kind of like accessing sort of like on the buy side of the market. And then like, is it large banks? Is it private credit? Like who's actually sort of on the flip side of providing the capital?
Yeah, sure. So the interesting thing about this is that there are a lot of different types of people that are accessing Crux. And Crux is designed to be used by the widest range of people possible. Like our mission is we want to be kind of the central clearinghouse or central meeting place where all of these types of transactions, no matter who is on what side of the transaction, clears through Crux. In the simplest term, though, typically on one side of the market are the IPPs that you're mentioning. We call them developers, but also manufacturers. And the reason I mention manufacturers is because there are tax credits that are available for advanced manufacturing of certain, pieces of the clean economy. And those tax credits are available to manufacturers as well as tax credits available to clean energy developers. And so they typically exist on one side. But they are the people that are kind of building and advancing America's clean energy future. On the other side are sources of capital. And so some of those sources of capital are corporates who want to purchase tax credits. And that's where we got our start at Crux. But additionally, other sources of capital could be lenders and private credit institutions that are providing, debt financing to developers and manufacturers. So that's kind of two types of capital that we've got. In addition to that, though, there are often intermediaries, some of those being banks, some of them being tax advisory firms, some of them just being private kind of brokerage shops that are also, utilizing Crux as the rails for a transaction. So they're bringing their capital relationships and kind of the more old school method of like peer-to-peer brokering, and they're using Crux as a streamlined and liquid transaction layer to be able to do their jobs more efficiently as well. So really, we're kind of the transaction platform for everybody.
And in terms of the benefits that this brings to, both people on either side of the market, the first benefit that comes to mind is lower transaction costs, right? It's just quicker to get a deal done. You don't have these really long back and forth human peer-to-peer conversations, as you mentioned. But is there also an element of, you get better financing rates, or it's easier to move your tax credits? I mean, is there also sort of a pure financial aspect involved as well?
Yeah, I wouldn't say that it's okay. So for sure, one of the things is that we're trying to essentially reduce the amount of friction, right? So that gives everybody a better deal. If we can drive legal costs down because of standardized agreements that Crux is providing, and we can drive diligence costs down because of standardized diligence checklists and kind of data rooms that are technology enabled, etc., that's a great thing because both buyer and seller win. But the other thing that Crux is doing is it's providing better matching. Right. And so it's not necessarily that one party is doing better than the other. It's that parties that are going to have a successful deal are able to find each other more quickly. And it's providing more liquidity in that market. Right. And so that better matching process, that more efficient, streamlined matching process, in addition to reduction in transaction costs, is what's drawing people to Crux and was what has made us successful thus far and will continue to make us successful.
Got it. So it's almost effectively reducing that matching time, if you could think about it. Just make it a lot quicker to access that capital or sell my tax credits.
Yeah, it's made and really that in and of itself does drive transaction costs down, right? It's switching costs. Totally. It's just other sources of friction and the time investment from kind of the deal teams on both sides, right? It is better to be able to have one conversation, and this would be the dream, but to have just one conversation that instantly identifies to you that this is the exact right counterparty to move forward and transact, right? And to transact as quickly as possible on a set of documents that require as little back and forth as possible. And that's what we're driving towards on Crux. And so, our kind of marketplace engine provides for really efficient matching. And then our transaction tools provide for really streamlined transaction closings.
And so for the people who are on the platform, what does this actually look like from a product perspective? Say I'm developing 100 megawatt utility scale solars. Do I create a profile for myself and upload that and say I'm seeking X $1 million of capital? And then the debt providers, look at it and kind of go through this list of options? Or what does that sort of matching and just the functionality of the product actually look like?
Yeah, I mean, you pretty much nailed it on the head, right? So right now, Crux has kind of two different marketplaces available to it. It's got a tax credit marketplace where we got our start, and it's also got a debt marketplace. If you are a clean energy developer or manufacturer, you will get a Crux account. And then on that Crux account, you can list a tax credit for sale on the tax credit marketplace, or you can list a need from a debt perspective, right? And you'll list out, depending on which one it is, all of the various terms and pieces of important data that are associated with either the sale of that tax credit or the raise of that debt. And then on the other side of the market, either corporates in the tax credit world or private credit or debt providers in the debt side of the world are searching for something that fits their needs from a size, scope, scale perspective. And then they are providing indicative interest on that kind of transaction when they see something that meets their needs.
Yeah. Is there any reason, especially as it relates to your debt product, that, you wouldn't allow, and maybe you do, I'm not sure, say I'm building a natural gas power plant, could I post that there? And I know Crux's mission was really around sort of facilitating financing for green energy, but is there any sort of reason why it couldn't be expanded to other forms of like energy production.
Yeah, there's really no reason that it couldn't be like expanded to all kind of forms of energy production or anything related to energy, right? Our debt providers, obviously, if they generate a tax credit, you have to generate a tax credit to be on the market, right? But that it's not related only to what we call green energy. There are various forms of kind of the energy future of the United States that are generating tax credits that exist on Crux, and those tax credits can be traded on the Crux marketplace. On the debt side of the house as well, we obviously have targeted investors that generally are related to America's energy future. So as long as it is kind of a project or a manufacturing facility or something that is related to advancing kind of the clean economy, it is generally something that we are going to be able to facilitate and that our investors and our lenders are going to want to facilitate.
Yeah. In terms of, I want to kind of like go back a little bit to like, the earlier days of Crux. I mean, now you have two different types of markets. It's well established, but, a challenge with marketplace businesses often is like balancing that sort of demand side and the supply side. If there's nobody supplying the credit, then like, why would I come to Crux and vice versa? So what were maybe some of the strategies that, you guys as a team employed to sort of like balance and attract both sides of the market, especially in the early days of Crux?
Yeah, for sure. I think look, one of the things that is clear when you kind of look us up is that we invested a ton in market intelligence from the very early onset, right? In 2023, the first year of the transferable tax credit market, we produced the kind of marquee market intelligence report at the end of 2023 highlighting the $7 to $9 billion worth of transferable tax credits that had been transacted throughout the year. Now at Crux, we're sitting on a database that has over $25 billion worth of transaction level data for the transferable tax credit market. We think that's over 70% of all of the transactions that have ever taken place in this market. That data, right, has been really helpful to show both sides of the market that we are the people that kind of understand where the market is and where the market is transacting. And that kind of education to both sides of the market has allowed us to attract both buyers and sellers of transferable tax credits. For sure, it took some time for us to build it up, right? And it takes some time to invest in both sides. Our first deal was done in Q3 of 2023. And towards the end of it. So basically it took us 3 quarters of kind of like building up market intelligence and educating the market to get a working marketplace together. But since then, we've completed over 70 transferable tax credit transactions, and kind of that scope and scale of our marketplace has continued to attract more and more folks, in addition to us continually producing as many insights from a market intelligence perspective as we can.
Yeah. Was a lot of it in the beginning too, I imagine, like somewhat network based in terms of, reaching out to people that you knew from your prior on the developer side, and maybe credit providers or tax equity providers that you guys knew from sort of like the treasury side of the equation to sort of almost go back a little bit to that peer-to-peer brokerage to facilitate the first couple transactions?
Yeah, of course, right? We were an early stage company with a small team. And so like any early stage company with a small team at the beginning, we were for certainly hustling. And we were relying a little bit on the relationships that we had made through our prior careers in clean energy. And so that's probably a lot of what the beginning of 2023 looked like. But then as we started to do deals, have press releases, produce market intelligence, right, we started to make relationships outside of kind of historical Rolodexes that continued to grow the company. And we also continued to make hires of people with additional relationships that compounded on top of that as well.
In terms of, thinking about sort of like growth for the future, like what kind of geographies do you guys currently operate in today?
Yeah, we're fully nationwide, and I think we plan to continue to really be investing in the like America's clean economy and the future of the American energy economy, and so that's where we're focused. But we are across the United States.
Great. I now want to sort of again change gears a little bit into maybe dive in a little bit more on the sort of transferable tax credit portion of sort of the business. I mean, that's where you guys started. Just before we dive into that, like I think we've kind of alluded to like what a transferable tax credit is, but maybe like go back to the beginning of like, say I'm a solar developer, like how much do I get in a transferable tax credit? Like what's the sort of like legal code? What's the process? I mean, like what are they effectively?
Yeah, for sure. So like, let's talk about tax credits and then transferable tax credits. And like, we could spend a long time talking about this. So I'll try and give a good high level overview if I can. American energy has been financed through tax credits for a very long time, right? And before Wharton and before Crux, a lot of the ways that I was financing solar projects in the past was through tax equity, which is essentially creating a bespoke partnership to be able to disproportionately allocate tax benefits to a tax investor and a sponsor. What that really means is you're essentially transferring a tax credit from a clean energy sponsor to a large financial institution like a bank through a very bespoke and complicated method. So credits were not transferable, but there was a piece of financial engineering which was developed called tax equity to make them transferable. In recent times, what has happened is that tax credits have become actually transferable in a much simpler way. They are now like a piece of paper that you can buy and you can sell. And there are generally two types of tax credits that exist that are transferable. One is called an investment tax credit. The other one is called a production tax credit. An investment tax credit is a tax credit generated when an energy system generally goes online that is equal to some percentage of the total cost of investment of that energy system. A production tax credit is a tax credit that is generated through the production of something. And so sometimes that is energy, sometimes that's like a molecule, like a clean fuel or a hydrogen or something along those lines. And sometimes actually it's a manufactured good. The 45X advanced manufacturing tax credit is a production tax credit associated with the manufacture and sale of a manufactured good. Those tax credits essentially then can be sold, and they are sold kind of like, the analogy I like to use is like a Starbucks gift card where, I maybe don't drink coffee and my friend does drink coffee. I have a Starbucks gift card for $20 that I'm not going to use because I don't drink coffee. I will sell it to my friend for $15. I get a $15 benefit because the $20 gift card was kind of useless to me, and my friend gets a $20 Starbucks gift card, which they were going to spend $20 in Starbucks anyway. That's how a transferable tax credit works, except for that generally it's the developer or manufacturer who doesn't have a huge tax liability and so can't internalize that tax credit, selling it to a corporate that does have a large tax liability who can internalize that tax credit.
And are those same, like going back, that was a super helpful overview of what the market actually looks like, but it sounds like there was almost like a little bit of like a boutique market for tax equity before this transferable tax credit. Are those same banks like still a player sort of like in the tax credit market, or because it's so much easier now, it's like a little like they don't actually really need to be in the market and you can go like to talk about like directly to corporates or other people?
No, interestingly, the banks are playing an even bigger role now that there is transferability than they were previously. And the reason is because those bespoke tax equity partnerships that existed can now transfer credits out of them. And so historically, the tax equity market has been about $20 billion a year. There's been about $20 billion of tax equity issued. That is kind of staying the same. So what we saw in 2024, for example, is that actually $28 billion worth of tax equity partnerships were written, but $7 to $8 billion of the tax credits in those partnerships were actually transferred out into the transfer market itself. And so transferability has allowed these banks to do more tax equity than they previously could because they can get rid of some of the credits to corporates when they want to. So the banks are now essentially purchasers of tax credits through tax equity and also sellers of tax credits into the transfer market. But certainly transferability has been kind of supercharging the investment into America's energy future. And you can see that because historically, again, right, the tax equity market has been $20 billion. In 2024, we think a total of $52 billion of tax attributes were monetized, 22 of that through kind of historical tax equity, but 30 billion of it through transfers.
In terms of, like your competitor landscape, is it, just like one-off peer-to-peer brokerage? Are there other sort of like tech platforms that are sort of developing? Just like trying to understand the competitive landscape.
Yeah, so I don't like to say that we have competitors necessarily. It's kind of apples and oranges because, a lot of people are doing, different things. So I want to talk a little bit about kind of some of the differences and the reason why there aren't too many true competitors of ours. We are the kind of platform for buyers and sellers and intermediaries of all of these different products, right? So if you are kind of a traditional broker or a bank or somebody else that is making markets here, we invite you onto Crux, and we have built tools specifically for you to be able to essentially supercharge your own business through having a tech platform and the increased liquidity of the Crux platform. And so that's kind of what's allowed us to be kind of, collaborative with everybody out there in the market. In addition, right, we're not at Crux specifically thinking about kind of one-off deals. We're creating the platform, the rails for the transaction, market intelligence, all of the kind of different pillars that we had previously talked about with relation to Crux that make us kind of a little bit different and what I'd say unique out there in the market. And so certainly our goal is for the majority of the market to flow through Crux, and we're trying to enable all of the different firms out there that are participating in the transferable tax credit market to have a little piece of Crux and kind of a slice of the Crux market.
Got it. One question that I realized I probably should have asked earlier. I mean, what does Crux's take on this market actually, in terms of a fee structure, actually look like? Is it a flat per transaction fee? Is it a percentage of the overall sort of equity or debt that's raised on the platform?
Yeah, generally we are taking a kind of percentage-based, success-based only fee. So if a transaction closes on the Crux platform, we will take a very small percentage of that total transaction size, essentially for facilitating the transaction. There are a number of different factors as to kind of what that percentage can be based on the various feature sets that people are essentially using on Crux, but that's how it works. We will never make money on Crux, or at least we don't right now, if we are not successful at actually making a transaction happen or getting a buyer or a borrower and a lender what they actually want.
That obviously, if it's a percentage, means that you guys want to get bigger and bigger and bigger deals on the platform.
Yeah, but not necessarily, because the percentage also can scale with transaction size, right? So it's not a flat fee, but our goal here is to essentially make, clean energy finance more efficient and interconnected. And so we do not want to be scaling towards only very large transactions. Okay. We have done transactions on Crux in the 5 digits and in the 9 digits, right? Where we're talking $50,000 transactions up to multi-$100 million transactions. And the point of the platform is for all transactions and shapes and sizes to be facilitated here, right? One of the things that existed in the tax equity market, one of the reasons I was drawn to Crux, is that in the tax equity market, typically the minimum check size for one of these types of transactions was about $50 million. And we thought and saw tons of essentially clean energy projects and manufacturers that didn't have access to this type of financing because they weren't big enough. And so at Crux, we definitely don't have a lower bound, and we're trying not to be incentivized to just do very big. Got it. We want to capture the whole market.
No, that makes a ton of sense, because I think inherently bigger deals lead themselves more to sort of bespoke agreements for XYZ reasons. So in the facilitation of a tech platform, definitely makes sense for smaller transactions.
It's true, but also the thing that I would say is that people think that bigger deals facilitate more bespoke agreements and that sort of stuff. I don't think that necessarily needs to be true, but I do think through having Crux be the platform that does more deals than anybody else, we can continue to iterate on this, and we want to get to a point where these transactions become really streamlined, simple, easy, low transaction costs, no matter what size they are.
Have you guys found, I guess on both sides of the market, but I'm particularly interested on sort of the financing side of the market, you have a lot of repeat customers, quote unquote, that people come and buy tax credits or provide debt multiple times? And is that the case also on the developer side as well?
Yeah, absolutely. One of the things that's great about Crux is we love to see repeat business, especially between same buyer and same seller, right? Because it makes that even reduces transaction costs and facilitates a smoother transaction moving forward. And so we absolutely see repeat multi-year and second and third and follow-on transactions occurring on the platform. But one of the great things about the platform is that it doesn't need to happen. If somebody's goals change, right, it because we're providing this kind of liquidity layer, if one of the two parties can't do a transaction, the following year or the following month or whatever, they have access to Crux and they can quickly find a new counterparty to do a deal with.
Yeah. Interesting. In terms of just I want to understand, just honestly out of my own curiosity a little bit, who's buying the tax credit? I mean, you mentioned corporates, but is it Fortune 500s primarily? Is there a particular sector that you found to have a particular appetite for this, or is it just every type of like corporate enterprise you could think.
Yeah, look, I mean, at the end of the day, it's kind of anybody that can purchase a tax credit sometimes will purchase a tax credit. And so at the small end, for the smaller deals, those kind of, 5 or 6 figure deals, we're talking sometimes about high net worth individuals that kind of exist in the space, but often like family offices, etc. And then at the very, very large deals, we're talking about the Fortune 50, right? Many of the purchasers are corporates. Many of them are public companies. And especially as you get larger, that becomes more true because you need to be quite profitable in order to generate enough taxable income for these things to be valuable to purchase. But really, again, like there are a lot of different buyer counterparties. And especially as you get to the smaller size of these transactions, the diversity of the type of counterparty increases.
Yeah. I just want to ask quickly now, I mean, it's kind of a little bit of an elephant in the room, just given sort of like the current political climate, like especially when it comes to sort of like the tax equity market. I imagine the debt side of the equation won't really change that much. But, you mentioned that like, especially when it comes to the transferable tax credit component, it's fairly recent, starting in 2023, obviously sort of like spurred on by the Biden administration, very different administration right now as it comes to like a lot of climate policies. But that being said, we maybe have seen that like, particularly provisions in the IRA have been somewhat safe, just given that like they often sort of benefit, redder districts, and it was done in a good way where it maybe isn't actually going to be refutable. How have you guys sort of like navigated that uncertainty? Has it been sort of like a ding on the business? Just, it's obviously a top of mind question right now in climate tech. So curious for your take on it.
Yeah, no, we get asked this question, as you can imagine, all the time. Look, I just want to kind of lean on the Crux data. Again, it's why we capture that data. The great thing that I would say is that in Q1 of 2025, we are seeing 400% more commercial activity existing in the transferable tax credit market and on the Crux platform than we saw in Q1 of 2024. I don't want to opine on what would have happened if there were different administrations, et cetera, but there is still a strong market, right? We have closed over 12 transactions on Crux in 2025 already and are continuing to advance transactions every single day. And I think it's because of what you said, right? Like, these tax credits benefit every district, every state, tons of industries, and really the market doesn't seem to be slowing down, which we're happy to see.
Yeah, no, that's comforting to hear, I suppose. I kind of want to move now into like sort of like the final like wrap up of the episode in terms of like maybe talking about sort of like advice. I think there's maybe a lot of people listening to this podcast that are interested in going into climate tech. Maybe I think common paths into it are either from like a very technical scientific background. In your case, you kind of work directly for a developer. Maybe some people are approaching it from a finance background, but like what are maybe some of the key things that you guys are looking for if you were to sort of like bring on an MBA or advice that you would have that you sort of followed from your MBA of like getting a job in like the climate tech space?
Yeah. So like to everybody that's out there and listening, number one, just take a look at our job board and keep an eye on our job board because we are hiring pretty consistently for a various number of roles where some of the roles are going to require more kind of a deeper background in what I'd say renewable energy or climate tech, but some of them won't necessarily. And so everyone should keep an eye there. The other things that I would say is, Wharton's got some really good climate tech and clean energy and just kind of energy finance classes, which, and I took a number of them there, and they're pretty good primers to get you to understand how the markets work. And, I know that there are some of them that even touch on kind of like tax equity and tax credits in general and kind of financing methodologies for them. But in general, at Crux, we're like other just, startups with a high bar. We're looking for motivated entrepreneurial individuals that, want to go, work for a mission-driven company and kind of get stuff done.
Yeah, no, I think that's an often refrain that we've heard is just like, get out there and do it. I think there's probably more demand for people than we actually realize. So again, another comforting note to end on for all of us job seekers out there.
Yeah, and for job seekers, seriously, take a look at the Crux job board. There's always a new posting on there.
Well, awesome. I really enjoyed doing this episode. Like I learned so much about this market. I think it's like one of the more like hidden financial markets. I think a lot of people like often obviously know about equity markets, debt markets, but especially the tax transferable credit market and tax equity is like, unless you're really deep into energy, you probably have not heard about it. So hopefully this sort of like helps people learn a little bit more about it. And I certainly enjoyed sort of speaking with you and hearing about the Crux mission and where the company is going.
Awesome. Thank you for having me on.
Yeah. Cheers.